Let's talk about Tesla earnings, and then we can get maybe to some of the other tech stocks. Impressive to you? I mean, they did have a challenging quarter. I mean, it was a challenging quarter to get through, and they got through it. There's no question.
Yeah, I mean, Tesla really proved that they are a manufacturing company, despite all the distractions and sideshows with Tesla. But they're a manufacturing company, a pretty good one. They had really strong deliveries and had strong operating margins despite the lockdowns in China, despite the shutdown in their Shanghai plant. And they're a manufacturing company making a product that people really want. They were asked on the call whether or not they saw any fraying in demand given the uncertain economic environment. And they said no, they still can't keep up with demand. They still have a big backlog. And so they still have more demand than they really can supply at this point, despite economic uncertainty. And so there is this expectation, they said, that they'll continue to be able to keep their 50% growth target, which is really impressive in this uncertain environment.
So, but let's talk about two pieces to this. At the same time, that they have clearly an operating profit and margin on the cars at this point. And I know people have tried to question that over the years. There's still this question of free cash flow that went back and forth a little bit ping-ponging last night on Twitter with some of the folks from Tesla's investment team and others about the sale of Bitcoin and what you think that was really about.
Yeah, they blamed it on the uncertainty about how long the China plant would be shut down. They said that because of that uncertainty, they wanted cash liquidity. But that doesn't necessarily tell the story. I mean, we don't know if they did it in order to realize a gain and boost that cash flow number. You know, at the end of the day, this is a very capital intensive business, meaning that they have to invest a lot of their cash into the business just to be able to grow. And what that does is it eats up cash and the inability to return excess free cash flow to shareholders. So that is an odd move this quarter, and blaming it on uncertainty around China to get that cash liquidity.
When you look at some of the other big tech stocks, we just talked about the gains that we've seen since mid-June there, in some cases as high as 18%. How much more do you think there is to go of the sort of FANG stocks out there? What do you like? What don't you like?
Yeah, we think some of this rally can continue because at the end of the day, when you have growth scarcity, when there's uncertainty about how much the underlying economy can grow, what ends up happening is that people go into stocks that can kind of grow regardless of underlying GDP. They have that idiosyncratic growth. And there is that sense that a lot of these big tech stocks have the ability to do that. And even if there is some disruption to the earnings line, take a name like Google, for example, with uncertainty around ad spend, as companies are starting to say that they're pulling back on advertising spend in order to save capital and preserve margins in an uncertain environment. You're still looking at that name trading at just a 7% premium to the overall S&P. Back last year, it traded at a 25% premium to the S&P. So a name like that that's growing earnings mid-teens, has over 30% operating margins, you're not having to pay up for that. There's really no question as to why you're seeing a little bit of a relief rally.